Hey everyone, so in today's video I'm going to take a look at something called entrepreneur relief. So even if you're at the stage of where you're just starting your business, you still should be thinking of down the line how you can best get your money out of that business in the most tax efficient way. And entrepreneur relief is definitely one of them that is worth knowing about. So I'm going to go through it, briefly give you a good overview of what it is and who qualifies for it, and also give you one or two examples at the end. So it will just take a couple of minutes, and so stick around till the end. Essentially, what entrepreneur relief allows you to do is to get a lower capital gains tax rate on the sale of qualifying business assets. So the tax rate that they will give you is 10%. That is opposed to the normal CGT tax rate in Ireland of 33%. So it's a big saving and could be worth a lot to you. Now, there is an overall lifetime limit on this entrepreneur relief of 1 million. So anything above that, in terms of any capital gains that you make above 1 million in your lifetime from the sale of qualifying business assets, will go back to the normal 33%. One thing people often assume as well, this is only really related to people who have shares in limited companies, but that's not true at all. It's open to both sole traders and partnerships as well. So no matter what type of business that you have, if you meet certain criteria, then you can qualify for this entrepreneur relief. The lower capital gains tax rate will be on qualifying business assets. So these can include shares held by, say, you in a trading company, but you need to own more than 5% of the ordinary share capital in that company. And then if you are a sole trader, it can be any asset that you use purely for your trade. There is a few more additional criteria that you need to meet, and let's go through them briefly now. So if you're a sole trader, you must own that business asset for 3 years continuously in the 5 years before you actually dispose of whatever that asset is. So 3 years continuous ownership in the previous 5 years before disposal. On the other hand, if you are a shareholder of a limited company, as I said already, you must own greater than 5% of the ordinary share capital. You must also own the shares for 3 years continuously, but it can be any time prior to the disposal of the shares. You must also have been a director or employee in that company and spend more than 50% of your working time in the business in a managerial or technical capacity. Sorry, that says group company there. That's actually related to a later slide, so you can ignore that. So you just need to be either a director or an employee that spends most of their time in a managerial or technical capacity in that company. So you can't really be, a silent shareholder that only holds the shares and does nothing else, because in that case you could even get entrepreneur relief if you're owning shares in, say, AIB or Bank of Ireland, for example. So that's why you need to have actually worked in some capacity in the company as well. There are also a couple of different business assets that won't qualify for entrepreneur relief. Let's go through a couple of them now. So if you dispose of any goodwill connected to a company, goodwill is kind of like an intangible value of what the company is worth over its actual value of whatever assets and liabilities it has. Also, you can't dispose of any development land or land that was let out and get entrepreneur relief on that. If there was no chargeable gain, so you'd made no capital gain, obviously you're not going to get any entrepreneur relief in that case. Any assets that are held purely as investments will not also qualify for entrepreneur relief. If you are the shareholder of the company and you only dispose of part of your shares, or any situation where you remain connected to the company post the sale of your shares, you also will not qualify for entrepreneur relief. And lastly, if you're selling any personal assets, then it also will not qualify. So last week I put up a video going through the tax benefits of setting up a holding company structure. You can check that out if you don't know what I'm talking about here. But let's just talk about entrepreneur relief when you have this kind of holding company structure. When it comes to owning shares in a holding company, you must own 5% of the ordinary shares for a continuous period of 3 years in the 5 years before disposal. The holding company must exist purely to own the shares of its 51% or more subsidiaries. So all of its subsidiaries obviously would need to be 51% or greater. The next point is a very important one to be aware of. For it to be a qualifying group, all of the subsidiary companies need to be carrying out a qualifying business. So what I mean by this is, say if your holding company, for example, owns, say, 3 different trading companies, all of those trading companies need to be qualifying businesses. In a situation, let's say you own 20% of the shares in the holding company, and those holding companies own 3 more entities, and 2 of them are trading companies that are qualifying businesses, and the other company is actually just a dormant company doing nothing, then you will not qualify for entrepreneur relief at all. So you have to make sure to structure your group correctly. And lastly, you have to be either a director or employee of one of the group companies and spent more than 50% of your time in a managerial or technical capacity for 3 continuous years in the 5 years prior to disposal of your shares. So let's finish off with 2 examples just to make sure that everybody kind of understands how it works. So this one is for a limited company. Jonathan owns 40% of his shares in a company called TGS Limited. So he owns greater than 5%. So he can check that one off. He acquired them in 2018 for a total of 300,000 and sold them in 2022 for 1.6 million. So we can safely say he held the shares for 3 consecutive years before he sold them. And also, over the time that he was a shareholder in the company, he was also the company director. So that means he meets that last requirement where you have to have 50% of your time working within the company. So this is how the calculation goes. So sales proceeds were 1.6 million. His shares only cost him 300,000, so it was a capital gain of 1.3 million. He gets his annual CGT exemption of 1270. So that brings down his net chargeable gain to 1,298,730 euro. The capital gains tax due is going to be 10% on the first million, so it's going to have 100k there, and anything over the 1 million capital gain is taxed at the regular CGT rate of 33%. So he had an excess of 298k there, and at 33%, that worked out at 98,500 capital gains tax. So overall, he paid 198,591 euro. So the reason for this split in the calculation here, as we said at the start, is there's a lifetime limit of 1 million that you can use for this entrepreneur relief. If there was no such entrepreneur relief, he would have paid 429k. So he did save 231k overall because of the entrepreneur relief. So it is good to try and start planning for these things well ahead of time, so you know how to kind of move around your assets and know what to sell and to make the best use of your entrepreneur relief. In the second example here, we're going to look at a sole trader. So William is a butcher who started his business as a sole trader in 2017. He bought his premises and kitted out the shop for a total of 220k. In 2022, he decided to sell his business premises along with the business name and the goodwill associated with it. That came along with his business for a total of 560k. So his sales proceeds were 560k. The cost, as we said, was 220k. And then we deduct off our annual CGT exemption, and we come to a net chargeable gain of 338k 730 euro. So his net tax due then is 33k 873 euro. There was no issue with him selling the goodwill because he's a sole trader. The only time you really get stuck with goodwill is when you're selling goodwill related to a company, so he is all good in that scenario. And he had also owned his business assets for well over 3 continuous years within the 5 years before disposal of the assets. So there was no issues whatsoever with him claiming the entrepreneur relief. So that's pretty much it for my video today, and all I wanted to go through, kind of give you a kind of a high level overview of how it works. I hope you found the video useful. If you did, I would really appreciate it if you just drop a like on the video, and also subscribe to the channel just so you can keep up to date with all of my latest videos.